my circle of friends, I am aware about this kind of issue, and even when I was into practice, and I could, feel the heat that we find from this issue. GST return में कुछ और चला गया है, and my books of accounts are saying something else, and I do not know how to rectify it, how to make my books of accounts reconcile with my GST returns. So we'll be covering that only today. Okay, so before that I would like to tell you that our 50% off offer is going on. So if you have not yet availed that offer, please avail this offer. That is valid only for one more day, up to 10th of September. Also, if you have not yet checked out our YouTube channel, do check it out, and we have a lot of videos on taxes and savings over there. Do check it out and subscribe it, and also do not forget to click on the bell icon so that you always get an update whenever we post a new video. So with that, I will start with this slide. First slide that I'm going to cover is the content. Simple way how you can identify the month where the difference exists. With this technique, or with this method that I'll share with you, you will be able to find out that. And also, this is a foolproof method. If you will follow this method, you will never ever face this again. Like, your books will always match with your GST returns. Some of you might even be practicing that, and I'll also take up your questions from the chat after I've completed this presentation. Okay, so what is the primary source of data for GST returns? We all know it is books of accounts. So if books of accounts are primary source of data, why do we need to reconcile with them? Because that does not match with our GST returns. Why does it not match? Because changes over and above the accounts that is communicated over phone, or the accountant or the person who is filing the return is also engaged in other things, and he'll just call and inform the person filing the return that ये भी change कर देना. See, there is another invoice. I remember when GST was introduced in July 17 or August 17, I used to get calls that my credit note is not reflecting in my books of accounts. How do I do that? So we would tell them, just mail it along with your 3B, like 3B data. So along with 3B data, there were a few credit notes that were not reflecting in the 3B report of the accounting software, but it was taken in the GSTR-3B. So that kind of situation has arisen. Sometimes the accountant is not there. They'll just tell us that this is the turnover, and this is the ITC that we are expecting. One of the cases that happened with me was, it was last day of filing, and they did not get the purchase invoice from their accountant. Like, accountant was on leave, and he was on leave for like 10-15 days, and they did not know where it is kept in the office. So lump sum credit they had claimed, because they knew that it is under 10,000 only, and they were required to pay in cash 5,000. So they had just put in lump sum 5,000, and then in the next month they had to reconcile. So if you will follow this method, all these kind of situations, like, we all know that there are so many situations because of which the differences arise. So if you will follow this method, it is a very simple method. All these kind of differences you will be able to handle, and your books of accounts and your GST data will be reconciled, and you will have a total grip. Like, if you get a notice, you know where the mistake is, and how and where I have rectified. And for replying to notices, you might not be required to prepare a lot of documentation, a lot of working, and all those things. Okay, so let's start with it. The first assumption that I'm making over here is that there is a CGST or SGST or IGST ledger that is being maintained. Like, whenever you make a sale, your liability is getting into this ledger. This CGST ledger is what I've taken a screenshot of. And in any accounting software, you will be getting such a ledger. There is a single ledger, is what my assumption is, that your ITC is also in this ledger, and your liability is also in this ledger only. Like the sales, if you see, the sales is when you make a sale, if you have made a sale of say 100 rupees and 18 rupees is the GST on that, your 100 rupees will be credited in your sales account, and that 18 rupees is going to be credited in your this CGST or IGST or SGST account. So this is that account. All the effect of the sales voucher is coming as a credit amount in this ledger, and all the purchase or journals or whatever you have as a credit is coming in this ledger. Why do I take this ledger as a base? Is that whatever entry you make, it might not come, in sales register you have a columnar sales register, and every accounting software is going to have a different kind of sale register or the 3B report or GSTR-1 report or whatever other reports are there. Those are very subjective reports. In one software it might come out in a different manner, in another one it will go out in a different manner. But what this ledger does is, like, whenever you make an accounting entry, whenever you have correctly done the data entry, then what you will see is the GST credit, which is an asset or which is your right or asset, it will be debited. Whenever there is an ITC, it will be debited and it will debit in this account. And whenever you have made a sale, it is going to be credited in this account. As a liability, this will be credited in this account. So, like, this is the most simple assumption that I make in any accounting software that you use. Many of you would be using Tally, Mar, and other big softwares, other good software, but there are India as a market is a huge market. Like, I'm into Surat right now, and we have textiles as a prominent industry over here. There are 5 to 10 specialized accounting softwares for textile industry, which are, not an organized, not the organized accounting software market. So even if they make certain kind of mistake, like I know all over the India, different industry wise, for metal industry, for plywood industry, there are different kind of accounting softwares. But whichever accounting software is there, whenever you make an entry, that is going to have a ledger posting, and that cannot be compromised. So any accounting software, that ledger posting is going to be correct. The posting in 3B or in GSTR-1 might go a little, incorrect, or it might have been when the GST was launched. So if you have any carry forward of those time, like if the books is not matching for that time, this is a method that will also help you. So this is the ledger that I'm starting with, like assuming you have CGST, SGST, IGST ledger. Some people I know also maintain CGST, SGST or IGST, receivable ledger, and payable ledger. Like payable ledger is for all the sales and sale return is accounted there, and receivable is what is accounted of about the purchases and ITC. Okay, so these are the this is the basic assumption. I'll also cover that part if you have maintained receivable and payable as different ledgers. So this is the ledger that we are talking about. Okay, so what is going to happen is, if I have recorded all the sales and everything is coming as a credit amount, so the total of this credit, and if you also have some sales return, what you can do is you can filter out on the voucher type. You can filter out the type of transaction. Like, first filter out sale, take a total of it, that will be an X amount. If you have sale return, filter out the sale voucher type as the sales return or credit notes, whatever is there in your system. Take a total of that amount, that will be in debit side. So if you take the difference, you will be rest assured that this is my liability as per sales. So what you are going to do is, next step what you are going to do after getting that amount is, you will go and open your GSTR-3B, whichever you have filed. This is first what I'm talking about is whatever is already filed and there is a difference. Sorry, whatever you have filed and there is a difference. So you'll open that file GSTR-3B. Then what are you going to do? You're going to make this journal entry. You will create another account in the name of GST payable. This is for this is what table I'm using, that also I have taken a screenshot of. This is from file GSTR-3B. What you will do is, you will post the effect of liability that you have declared in GSTR-3B into a ledger called GST payable. Okay, this GST payable ledger is always going to reconcile. The total of this ledger is always going to come zero after you have made the cash payment if required. And if you do not have cash payment, and there are certain businesses I know, they always have a huge amount of ITC because of having a lot of stock, you can use this account as a GST receivable ledger as well. But as of now, for general public or for those who always have a payable amount, you have to use this ledger GST payable. So what you are doing is, whatever your liability is, like this 5730 of IGST, this 17,75,688.86 of your CGST and SGST, that you are transferring to a liability account. And where is it coming from? This ideally should be a total of this amount. Okay, of all the credits after reducing the credit notes, this should be the total of all these credit amounts. But if it is not, you will get a difference, and how to tackle that difference, that I'll take up in a few minutes. Okay, so this is what you will do with your outward liability. What you will do with your ITC is you will debit the GST payable ledger and you will credit IGST, CGST and SGST. Ideally, like, and this amount that you will get is from GSTR-3B. This is the most important part. Always remember these two entries of transferring the amount to GST payable has to come from your filed GSTR-3B only, not from your books of accounts. In an ideal scenario, it will match with the books of accounts and your CGST, SGST and IGST ledger will become zero. But we are not living in an ideal world, and as we know, we are struggling with the differences. So this is the most important point that you have to keep in mind. You have to take this from file GSTR-3B only, from table 3.1 for liabilities and from table 4 for ITC. Okay, I'm not taking into account very complex transactions, complex type of GST returns, wherein you have some ITC reversed and all those things. You can just take this net ITC receivable, net ITC available as an amount for this entry. So what is going to have an effect? What is the effect of this entry? Is the closing balance of a ledger. This is the same CGST ledger for another month where I've made the entry. The closing balance, the 592 rupees that you are able to see is the difference, which is because of this month only, because of August month only. So you will get to know that the difference is in August month only. Now I just need to get into August month and see what is not reported, or if the ITC is excess claim, or what has happened for that return period. And again, this will become the opening balance of next return period. For in this case, if you see, this is August 2017 that I'm talking about, and this will become the opening balance of September. So first, what you have to do is, first and foremost, pass all these journal entries. This one for GST payable, I mean for outward liability, and this one for ITC, whatever ITC you have claimed. So effectively what we are doing with this journal entry is we are transferring this liability. I've taken this simple example of IGST only, where my liability was 5730 because of only one transaction. So the total of IGST for this month is 5730. Now, because this has both the type of transactions and there is no control in this account, what I'm doing is I'm transferring this to another account, GST payable. GST payable is the account that is used for filing GST returns. So that there is a control account, as we used to call it in when we were studying CA final exams. We used to have control accounts in costing and cost and accounts books. So this will be a control account. GST payable is going to be your control account wherein the amount will be transferred. So ideally, if for the whole month I've got this only one transaction and that is transferred to GST payable, there should be no difference. But what has happened is I've claimed ITC of 8,52,070. Okay, you can round it off and transfer it as a rounded figure, but I usually do it in point basis only, and I use that rounded off thing in the GST payable ledger. GST payable is going to be a very simple ledger. You will just have these two entries, and if you have made any payment, that will be there, and that you can match with your GST paid in cash. You can open the challans and you can open the GST cash ledger and match those entries in the GST payable. But that is not the point over here. Over here, what we are doing is, now if you reduce this amount out of 8,57,209 that is there for the complete month, if you reduce this 5,700, you will get something around 8,52,000, 8,51,000 or something. However, ITC that I have claimed is 8,52,070, because of which I have a difference in this opening balance, in this closing balance for the month of August. Sorry. So I can see that I have taken excess ITC over here. So what I can do, first of all, this is what I'll do for each and every month, because of which I'll get the total difference up to March 2019 or 2018 or 2020, whichever month up to you are doing it for. Let's take an assumption of doing it by March 18. So what I'll do is I'll take all the accounts up to March 2020. I'll get these differences. This is the closing balance, this is the difference. Which is the kind of difference that we have to see? If there is a difference in the total of sales, like what we have over here, if it is a difference of total of sales to this amount, this amount of GST payable that we have transferred, or if it is the difference of ITC, as we can see in this scenario, there is a difference in ITC. So that we have to keep in mind. Do we have to increase our liability or increase our ITC, or decrease our liability or decrease our ITC? For that purpose, we will need to take care about that where is this difference coming from. What I can do is I can take down this amount 592 rupees and put it in an Excel stating that this is the amount of difference in the August month due to ITC. So what I'm going to do when I come to March and I'm filing for March return and I want to close my books of accounts and match it with my GST returns, what I will do is I will decrease my ITC in this case. So what will happen? The total of the ITC, if I look it up to March, and total of the this amount GST payable that is transferred, this will match. If I'll match it on month basis, there might be a difference. Like in August, there is a difference, and also it will come in March. But if you check it in totality, that will match. So by this method, I'll come to know that there is this kind of difference. If there is a liability that is not reported, if liability is excess paid, or if there is an ITC that is not claimed, or if there is an ITC that is excess claim. If I get to know about these things, I can easily do that in my 3B. Like I can rectify that in the next 3B and file my return. And also, if you are using receivable and payable ledgers as different ledgers, for that you have to make this entry. There is not much of a change. IGST, CGST and SGST ledgers become IGST payable, CGST payable, SGST payable, and GST payable ledger is same. This GST payable ledger is the control account that should never have a difference. That is why all these entries that you are seeing should come only from GSTR-3B. Why I'm emphasizing on this is because I've taught many accountants to make this entry, but still they would make this entry from their books of accounts. Like they'll take the total of this side of the sales and transfer that amount to GST payable, and then they'll say my GST payable is not matching with my 3B. So this is something very important that you have to keep in mind. Sorry, that this entry should be coming to GST payable only. Like this entry should be coming going to GST payable only from GSTR-3B that is filed. Okay, so if you are using different ledgers for receivable and payable entries, like for sales you are putting it into IGST, CGST payable, and for ITC or your purchases you are using IGST receivable, CGST receivable and SGST receivable account. So this is how you will make the entry. I hope this is very clear to you, and I'll just take up a few questions if there are any from your side before going to the next part. Okay, so as there are no questions, I'll be going ahead. So how not to repeat this error in future? By doing this, you will see that for the whole year, by the time you're closing the books of accounts of March, you will know that this is the difference. And how do I report it? That also I've covered in a later slide, which is also very important for how you do not repeat this error in the future. The first thing to take care is follow this procedure before every month, like every month before filing of your GSTR-3B. Okay, so if you are filing GSTR-3B, make sure that you have checked this ledger, the total, the CGST ledger or CGST receivable ledger for ITC and CGST payable ledger for your liability. Like you have taken the total of this amount, like the credit side. Also, if you have combined ledger, I would recommend that you put a filter on this voucher type and take only the sales and the credit notes if it is related to sales credit note. If it is related to purchase, take it with the that part, take it with the ITC part, like filtering it out with the ITC part. So make sure that you see the total of this side in the CGST ledger and you reduce the credit notes, and the amount that you are getting for your 3B is matching with that amount. So before sending it or before filing 3B, make sure that this entry makes this CGST or SGST ledger as a zero balance account, like the closing balance of this account becomes zero. So this is what you have to do before filing of return. If you are filing return with following this procedure, you will never ever have a difference, because whatever your accounting entry is, it is posting the correct credit as a debit balance in your CGST ledger and your correct liability in the credit side. And what are we reporting in 3B? Your liability and your ITC. So you will never have this problem. And also one more thing that is very important is keeping the filing data very organized. I cannot emphasize, I cannot tell you how much important it is. This is a screenshot that I've pasted of how I keep my folders for GST returns. Like right now I've stopped practicing. I was into practice earlier. Every month I used to have these folders, and in these folders, like before this folder there is a year folder. In that year folder there are months folder. In every month there is different file. Even if I get only one file, if say it is a nil return and only a late fees is applicable, still I would make one more folder for say July 2020 or August 2020 and keep the challan in that. If there is nil return also, I will make make a folder for that month. Though if it is nil return and there is no challan, I would create an Excel file and put a note over there that nil return for this period, so that whenever I come to this, now if you remember about what happened in 2018, you will not be able to recollect what happened at that time. Okay, so it is very important to keep each and every folder of each and every month in each and every year. I also keep the filed or reports or reconciliation data in a different folder. Like you can see over here in the screenshot, I have put in a folder of filed GSTR-3B or GSTR-3B or GSTR-1. There was another reconciliation going on for some period, so that also I had kept there. Also, this time that the reconciliation that I'm telling you, I'm taking only GSTR-3B as the base, because whatever payment or liability or ITC that we are claiming goes, though also it goes from GSTR-1, but the effect of liability, the payment and all that is required comes from GSTR-3B only. So that is why my basic assumption is, if your GSTR-3B is matching, it shall match with GSTR-1. Okay, and also you can use this method for matching GSTR-1 as well. And you can also use our clear tax tool. We have got a 3B versus 1 report, wherein you can see that in each and every month, which month you are getting difference, and you can deep dive and find the difference. This is something that people generally have problem with. That is why I'm taking only 3B as the base. And always keep an Excel in your format, for every month for 3B filing. I'll share that in the next slide, how I'm keeping an Excel. Like I used to have my own Excel. I designed it in July 17, though it was nothing different from government Excel. But if I'm keeping an Excel, I can put all the adjustments, plus if I have added something, if I have reduced something, I can keep that. And always note down the changes. Like that is the next point only. Always note down the changes in the Excel that is maintained. Like even if the client is sending you the Excel, make sure that your team transfers that figures in your own maintained Excel, because that is something that will be useful in the next time, and also for that will be a standard process across your organization. So even if your one of the staff is leaving and another staff is coming, he'll know what to do. You will not be dependent on a particular staff for a particular method, and when new staff is coming, you need to teach him how to do that, or even or either he'll keep it in his own way. So if to avoid all those things, you need to maintain such an Excel. See, this is the Excel that I maintain. This A part that you are seeing, outward taxable supply, and this was for the March, March 2020, when I had made some adjustment for 17, 18, 18, 19, 19, 20. Everything. This was a known person. He was my student, and he had come that my books are not matching with my GST returns. How do I match that? And someone had filed. I don't know what happened. So I shared with him this method, and he had put in all the entries of GST payable, and after that we got this difference. And also sometimes it becomes important that we do not dig in so deep. Digging in deep is not required, because there are small businessmen who have not much of a risk. Like if, for example, if in this case, if your ITC was less claim, why do you need to care if this is what bill did I not take. If you know that I have short claimed ITC, you can just add it in this Excel for this month, and you can claim that ITC. You do not need to dig further. And if you'll have such a report, such an Excel, if you get a notice for short payment or excess payment or something, then you can just open this Excel. You will know what is the difference, why is the difference, and you can draft a reply accordingly and send it to the officer. It will be like a quick job for you. In this case, what has happened was in 1718 they had made excess payment in CGST and SGST, and IGST was less reported. So when we saw all the ledger, we got to know which invoices they had misreported, or excess liability was paid. I was like, why did you pay 1960 extra? He said my CA told me, and he did not know anything. So this method has been foolproof. I have implemented it with many clients, and this has been very effective. For 1920 also, for all the months up to Feb, he reconciled and he got to know that this is the short payment by him. So he paid it with interest in March 2020 and March 3B, and after March, from April he is following this method. Though due to lockdown, April was not there, the business was not there. From May he started his business and he is following this method, and his CGST he is maintaining it in that manner. Receivable is in ITC is into receivable ledger, and the sales or the liability is into GST, CGST, SGST, IGST payable ledger. So all his ledgers are reconciled. Now he's rest assured. Like, one thing only that is very important is an important assumption is that the data entry is going fine. Like, if I have put in the ITC over here, that means I'm eligible to claim this ITC. If not, it should be expensed out. Like, if I'm talking about, say, for example, food and beverages expense. If I have got some food for business, like in the office premises, I got food for my staff, and on that also CGST, SGST is there. That CGST, SGST is not coming here is my only assumption. So you have to be careful about the data entry, that whatever entry you are making is correct. Whatever is going to your CGST ledger in the credit side is liability or purchase return that is eligible for reversal of ITC, or if it is coming into debit side, it is the ITC or your sale return that should be reduced from your liability. So if you keep in mind that part, that journal entry is done or the purchase or sales entry is made correctly, then this, if you follow this system, you will never have any difference in your books of accounts and your GST return. Just make sure that you follow this method. You take the total of the debit side and match it with your ITC. If it is not matching, you might have some purchase return. Try and find that and reduce it. Then it will match. And the closing balance of every month over here, it should be zero. Like, whatever is being transferred to GST payable should be the amount that is coming in your ledger. If you follow this simple method, I assure you, you will never have any difference in your books of accounts and your GST returns. And the liability and ITC part, the ITC part that I reconciled and maintained was this way. Like, this was for March 2020 only. This is the continuation of this part. This Excel has two parts. One is the liability part and one is the ITC part. That B2CS, what we call for interstate supply to unregistered or UIN or composition dealers, that I have not mentioned over here. You can have a separate section for that as well, so that you know, like, whatever data has come from client, that is one side, but whatever your team is filing should come from this Excel only. You can maintain it in your own manner, whatever you find suitable for you, but in Excel you can make notes, you can write down what was the difference, what had happened. Even if, tell your team that whatever you discuss with client, write it down over here, because client might not be with you after so long, but your office is going to be there. Your client is going to ask you, why did you file it in such a manner? So it is very important to keep the data organized. To keep the data organized, to match your ITC and your liability with your books of accounts before filing of return. And if it is filed, like for earlier periods, if you have filed without matching, do this method. Transfer all the ITC to the GST payable return period wise on the basis of 3B file. Transfer all the payable amount from your GST return to to the GST payable from CGST, SGST, IGST ledger and see where the difference lies, and take the adjustment in your next GSTR-3B being filed, and every month maintain this kind of Excel. Okay, if you are going to do this simple thing, you are always going to have the books of accounts matched with the GST returns. So I hope this will help you to reconcile the books of accounts with your GST returns, and there will be no mismatch in whatever you have declared in your GST returns and your books of accounts, and you'll be at peace. Like while doing GST return audit or GST audit, or while filing GST, and then this will be very helpful because you will know in which month you have made the payment of this. If it was done up to the next September, you can open just 6 Excel files and you will be good to go. About you will be able to file table 10 and table 11 in GSTR 9. So with that, from my side it is over. If you have any question, please uh, raise them now and I'll be happy to solve all those questions. Okay, so looks like everyone is very clear of what is there in this, but you can still put it in comments whenever this video is put up on YouTube channel. You can put any issues or any doubts that you have in the comment section and I'll be happy to help you there as well. Okay, so with that I'll just remind you for the 50% off offer that is valid only up to tomorrow. After that the prices may increase. So please avail this offer and buy this now. Now you can also buy it online, like you can go to our gst.cleartax.in website and buy that. The self checkout is there, you can make the payment there and get the GST software. After 10th of September, that is after tomorrow, the prices may increase. Also, again, to remind you of getting more knowledge as a CA, it is very important for everyone, not just CAs now. Now it has become very important for every businessman to get updated because there are so many changes going on. And if you have made a mistake in filing of return or anything, there is no excuse. Not knowing the law or not knowing what to do is not an excuse. It will invite notice, like you will invite notices. You will you might be liable for penalty or anything. Or if you can save something, if you want to make some savings, for that also we have a lot of videos. Do check them out on our YouTube channel and subscribe it if you have already not subscribed, and press the bell icon to get updated. Also, if you want to contact us for any queries, you can email to us on gstsupport@cleartax.in, and you can also dial into 080 6745 8707. We'll be happy to help you. Thank you so much.